So in the past few videos, we have been speaking about the Asia session liquidity run trades and the top-down process for that. Now what I want to do is go through the top-down process of day-to-day intraday work, such as, London and New York session trading, aside from that Asia session system. So I know that for a lot of the US-based members and US-based students, as well as students in other countries, that early morning 7 a.m. London time strategy is not going to be ideal for you. You may also just not want to use that and you want to have a clearer, larger outlook on the market and want to trade London, New York session in a different way. So in this video, I will be introducing the top-down process for standard intraday trading through London and New York sessions. Now, the examples I'm going to show are primarily going to be London session. I will, however, have a look at a New York one, and there are going to be a lot of examples in an additional study area at the end of this course. So without further ado, let us break into GBP USD and have a look at the opportunity that we can see right here. I'll break down the top-down process from start to finish for this intraday but different system approach. So for our intraday work, we only really need a picture of the current price action, okay? We don't need to scale super far back like we do on the high time frames. We don't need to see what weekly and daily areas are reacting back here because we are simply looking for a small move. Oftentimes just a move of potentially 10 to 30 to 40 pips, which means we don't need a massive range to work with. We just need to know where is the market likely to go next. So one of the first things to consider, which I have considered here, but you also need to remember as well, is that you need to be trading at the right session time, okay? So for me, it's always going to be pre-London and London session open, which means I'm going to be trading around 7 to 10 a.m. UK time. Sometimes I do trade New York session. You'll see many examples over in the server and also more examples in the extra study. But primarily for me, it's London session. So for this example, we're starting at 7 a.m. UK time. Now what we can see here is a lower low, lower high, lower low, and now potentially a lower high in a downtrend on the higher time frames. So that's the first consideration, that the market may be moving down. One of the biggest things we are trying to do with the intraday work is simply find an overall outlook of what the market is doing. We are not fishing for setups when we start analysis here. What we're doing is marking out areas of interest, overall market direction, and when we have that, we get a clear view of where could we take the market to actually line up with some of that stuff. So in this example, if I see an hourly downtrend, which is obviously what we see here, well then I can consider, okay, we are likely to sell off potentially once again. But for us to sell off, what do we need to do? Well, we need to fill some nice and balanced space and hit a high interest supply area. So I can see here, this large bullish candle before the sell-off is going to be a demand area, or a supply area, should I say, that the market is likely to trade into and then sell off. So we could have an idea that the market is going to do something a little bit like this, okay? Now, what does that do on an intraday perspective? Well, as one single day is around this much price action, we are probably not going to be looking for shorts this day. But what we could do is go ahead and look for potential buys into this point if we had some other formations telling us to do so. So at this point, we can have a look at this current price action, the current range we're in. If we mark out the low of this range, and then the high of the range is going to be that target area here. So this is the price action we are currently looking to work with. And what we can see here is after hitting this point, we came up, we formed a higher low, then we broke through to some higher highs over this previous structure. Since then, we have formed continually higher highs and higher lows. Now this push down here actually swept out these lows, so bringing the liquidity aspect in, we do have these 1, 2, 3 almost equal lows. They were swept out with this wick, and then we traded into a demand area lower in this movement. Now from there, we've had a large impulse, and if we look, this impulse has actually taken out these structure points, this structure point, and actually just about this structure point as well. Now, I think in the Asia liquidity run trading, I spoke about how on the intraday basis, even wicks breaking structure can be very beneficial to see. Because what that shows us is the order flow is up, right? If the order flow is bearish, we wouldn't have even gained the strength to go and push above the recent high. And we are looking to follow the order flow always. So we want to know, is the market bullish intraday or is the market bearish intraday? And then we can trade with that. So that for me is a nice indication that potentially the market is looking to make a larger move to the upside. We've just seen here a high swept out. The structure is kind of supporting that, and we do have this open space to trade through. So I'm just going to leave the market to play out a little bit more and see what we see. Now it looks like we are going to make a pullback down now. We could look towards a few areas of interest for a trade up. Now, one thing that kind of draws me in here is we do have these two equal lows. These do look kind of efficient here on the 10-minute time frame, but if we want to go to the very low time frames, we can do so. Now, first of all, I'm going to have a look towards this demand zone. And remember, we are just looking for ideas right now. We have the idea we could take this long, but we don't want to go slamming on loads of buy orders yet. What we want to do is plot out potential areas, and then we can wait and see what the market gives us. Now, when we have multiple demand zones, which in this instance we do, we have this first demand zone here. We have potentially another demand zone here, which does look efficient right now, but if we go to low time frames, we may see that it's not. In fact, it just about doesn't look efficient right there because we haven't retested. So this is an inefficient demand zone with equal lows just above it. So if I am to pull in this here, I could consider this as a potential buy point. But then looking towards this area here, this is the zone that broke structure really. So we do also need to keep an eye on that. Now there is also this demand zone here, which we could definitely keep in mind. And this has actually got one of the extreme zones that broke structure. So from here, I think this area is the least interesting to me because we have this imbalance into this demand zone. This one is quite interesting because it is the zone that broke structure, really, an imbalanced one at the extreme of the zone that broke structure. But then we do also have this point of interest below as well. So what we could do is wait for confirmations, or we could go with buy limits. Now, if we're using buy limits, where would we go? We would go within this zone or within this zone here. So for this example, let's actually just roll with a confirmation entry, see what that provides us. And we have the three ideas now to buy from some of these points. So notice how what we've really done is go to the higher time frame, the hourly, and work out the trend, then work out possible targets to trade into. Now, as we can see in this example, it's going to be this supply zone here. And now we've gone to the lower time frames to identify structure, supply and demand, imbalance, and liquidity. And what we have are three kind of tricky zones to work with. Now, sometimes we're going to have easier zones to work with, but in a day like this, where the zones are tricky, we may just wait for confirmation entries so that we don't have to take, potential 1-2 losses before we get a win, or we don't have to miss setups being too picky with the orders. So we worked out the high time frame idea, the high time frame target, and now we are on the low time frames, working out the buy zones, and now looking towards which zone is the market going to come into, and when it reacts, we will get an entry on from there. So we see here the market is making pushes down. We here have a push up coming out of that zone. So if we now go to the low time frames, we can see here on the 1 minute, okay, we have seen a push in. We traded into that zone there. We just about pushed below, which is actually also nice to see. And then we've had this large impulse up, which has broken some of this substructure. So we can actually see now that after a high interest area has been hit, we have started to make a shift. Now what we could do from here is look towards the zone that broke structure, going to be this zone here for a buy. Now that doesn't guarantee that this zone is going to get hit. If we clear this off now, this doesn't guarantee that the zone is going to get hit, but if it does, we know that this is a good place we would like to buy from because we have seen that shift out of the demand zone. So we could go ahead and place an order on here like so with a stop below the low, and then we could actually target all the way up towards that supply zone that we are looking to trade into. So you can see here, this would be a very, very, very big trade, okay? We have an 85 pip target there with a very small stop loss on this position. It's potential 19R trade. Now, it doesn't mean it's going to get hit, but if it does, this is a position I would be happy taking now that we've seen a reaction from that zone. Notice in these previous moves, we didn't have this much momentum coming out of a demand zone, but now that we've hit here, we've had a large burst of momentum breaking through these first structure points. So in this example, it looks as though we are not going to react to that zone. We don't need to be too hasty, but what I can see here is we've now broken this structure point as well, and that was using this zone. So this is the zone that broke structure, pushing out of that zone. So you could potentially use an order here, but due to the imbalance below, I probably would opt not to do that for this example. As we can see, we've had a push through, but it does now look like we are going to continue making higher highs. So what we could do in an example like this is start to follow this trend. This is the beauty of the intraday order flow kind of approach that I'm talking about with you all. We are simply looking to follow the structure on the very low time frames when we know the trend is intact. So for example, let's say we were looking at shorts, right? We can see here we're continually making these lower lows and lower highs. So we make a lower low here. That comes from this supply zone. When the market pulls back, hits that supply zone, it then sells off. Then we have this kind of choppy consolidation. Then we have a breakdown, so a new lower low. when the market pulls into the supply zone that formed that breakdown, we get another sell-off. We see here the market forms a little bit of liquidity, makes a new lower low, but then sweeps up, trades into that supply zone, and then we sell off once again. And this pattern continues. So when we have a trend in mind, we are just looking to follow the very low time frame structure like so. Now, we needed to see it form, but now that we've seen it formulate and we've seen a few structure points pushed, we've now actually seen this point pushed, which is a dramatic point with a large, obviously high interest supply area. And we've seen these previous points pushed. Well, we can see the trend from this point. We have higher high, higher low, higher high. We pulled back in. This higher low could have provided an entry, but now that we've pushed up, we've made a new higher high. So what can we do? Well, we can look towards this demand zone here for an entry. So our initial entry was missed, but a confirmation entry does not have to just be at the bottom. We can then continue into the trend. And if we just look at an example, potentially something like this, give a little bit of leeway due to these equal lows, and then we go for that original target we were looking for. And now we have a potential 22R move. Now you could actually be very safe with this move. Pull the stops below like this. This is still only a 6 pip stop. And this may be something you want to go for because obviously then we're going to clear out the structure between these lows and also keep this zone safe. So for this example, I'm actually going to do that. I'm going to stick to the 11.4 risk reward. This is probably the more realistic approach that you'd go for until you are a little bit more in tune with this whole style. And even then you may want to be a bit more conservative with the trades rather than high risk reward hunting. So we'll just roll with this one. Now, as we can see, we've traded into the demand zone. We should now get a push away if the market is going to continue trending up. As we can see, we've had a push away. Now the market's likely to come down, form a higher low, and then continue up to the upside. That's generally how this works. And here we go. We've now seen some nice breaks of structure. So we've had here a higher low form. Then we've had a higher high. Now we could pull back. We could potentially look towards this zone here because this is the zone that broke structure. And we may get a reaction from here, and that would continue the trend up. So at this point, because we made a new higher high, the trade would be break even. That comes into the management approach. And then we just simply ride the trend up. As you can see, we're now riding this trend deep into profit. And essentially, we can continue to stack trades onto this. And I'll show you some of the examples here. But this is going to be a big thing we talk about in the entries and the management. So for entries on this kind of trading, it can feel very hectic when you first start out doing it. As I mentioned in the psychological implications, things move very fast. And it does take some time to actually begin trusting the structure. But just looking at this area here, right, we have this zone, which formed this new higher high. The market pulled back, we wicked into this zone, and then we made a new higher high. Then the market pulls down, trades into this indecision candle, which is the final before the impulse. So we hit that level, we form a new higher low. Then we push up and form a new higher high. Then the market pulls back down, trades into the demand zone that formed this new higher high, and off we go again. Can you see the system here? Basically, we just follow that flow. When we make a new higher high, we look towards the zone that formed the higher low, and then we buy from there, okay? And we just continually do that all the way with the trend. Now, I'll talk about this in the management system because obviously you can see how this could potentially turn into a lot of losses, but we mitigate that by actually managing stops and stacking positions as well. So even when a trade does turn around on us, we generally are going to make some nice profits on the movement anyway. But let's just leave this to run out on the 5 minute and see how this trade actually performs. As we can see, we are making some ground towards that target, and we should come through and tap that because of the higher time frame confluences that we considered as well. All right. So very slow price action. This is obviously moving through Asia session. You probably would have jumped out of the trade by now, to be honest, if we're talking about a realistic situation. Now, it does look like we are going to hit the zone, but personally, if you consider what we were talking about before, we want to trade through our sessions, right? And, you know, most people are not going to hold a very profitable position like this through Asia session. So maybe when we hit the end of New York, that's going to be a good time to cut off if you hadn't already cut the trade off earlier. But let's just mark that up then. If we were to close this at the close of New York session, we can see here that we are looking at a 8.4R position. And that is a trade taken over the space of 1 day, executed in the morning as a confirmation entry, and then closed in the evening as a nice closure at the end of the New York volatility. And that is it. So that is the process, the top-down process of a low time frame trade, not using the Asia system, but just using structure intraday. Hopefully you can see how this system works. We went from the high time frame to find the overall picture. Then we work out where can we target intraday within the trend that's happening on the higher time frame. And then we just look for a indication to buy or sell towards those high interest areas. And then we look to close our trades and be done for the day. We can then elect to come back the next day and perform the whole system again. Very simple, very straightforward, trend following system. So over the next few videos, I'm going to show you entries, targets, stops, and management, and then we will shift into a whole bunch of examples on the high time frame, the low time frame, and the Asia liquidity run trading.